Hello and a warm welcome to this week's video update by Zenergy. It's the 26th of April. My name's Scott and I'll be taking you through the slides today, looking at the wholesale changes week to week. So if we first look at gas as a commodity, we can see a trend which has been going on for a few weeks now, in that we are seeing nearer term prices either stay flat or trend downwards, and we're seeing longer dated prices trend upwards in value. So for this week, we can see a typical 1 year or 12-month price contract is down ever so slightly 0.1%. Then we see year 2 and year 3 contracts gaining marginal gains. And that backwardation in the contract, which was quite a wide spread a few weeks ago, is continuing to contract. So we're seeing less price difference between a 12-month and a 36-month price now in the gas market. On the graph as well, you can see the dotted lines just to show what points I'm comparing week to week. In general, it has been quite a flat, steady period over the last 2 weeks, and it does really depend where you're measuring from. In this instance, we can see those figures there looking at week to week basis. Just taking a look at power as well. So power is very similar in terms of its movements. For 12 months, it's pretty much completely flat, so little changed week to week, 0%. And then we see the same theme as we saw in gas. Your year 2 and year 3 prices have been making steady gains throughout the last few weeks. And again, that backwardation in the market is contracting. As I mentioned last week, I would not be surprised in a few weeks' time if we see this invert in any way, or at least become level. So what's been driving prices over the last week? As we saw from the graphs, prices have trended ever so slightly up, and there's been a few reasons why. I'm going to take you through 4 of them now. So firstly, we saw the carbon market make a resurgence. The carbon market has been very flat and been trading sideways for a number of weeks now. But on last Tuesday, we saw them gain over 7% in 1 day. And I think really caused this fundamentally. It was more so traders entering back into the market after selling off back in late March. So there's more market participation really than an actual fundamental that drove prices higher. One fundamental that has increased prices more longer term is the French nuclear output has taken another hit. So this has been an ongoing story for much of 2022 so far. So several French nuclear reactors have now been taken offline for lengthy corrosion checks and repairs. With this, it does tend to take a few months at least, into possibly the years, to get this rectified, and that has seen prices trend upwards. Reason being is France is likely going to have to look at gas as an alternative kind of flexible solution to make up the shortfall while their nuclear output is reduced. We've been seeing oil have a very volatile few weeks really. It's having a number of drivers and pressures, downward pressures and upward pressures hitting it. But throughout this period, it has maintained over $100 a barrel for Brent. And this is causing longer dated contracts again to just trend upwards the longer it stays at these valuations. In terms of some drivers, so an upward driver was given last week when Libya announced they were unable to deliver from its largest production site. This was due to political unrest in the country. So that actually lifted oil around $5 a barrel. But then we saw some of bearish drivers on the commodity as well. So there have been a number of forecasts of slow economic growth into 2023, given the geopolitical issues and supply strains we're seeing. And we're also seeing the lockdown situation in China continue. So many cities, particularly Shanghai, its financial capital, are in lockdown right now, and that is weighing down the price of oil as the demand destruction and need for oil in China is reduced. Finally, last week was fairly disruptive in terms of flows from Norway into the UK. Now, some of this was planned maintenance already, but we saw a couple of unplanned outages as well. So really the flows from Norway were a bit all over the place last week. They have now seemed to have rectified most of those issues coming into this week. But there were times where the exports from Norway were significantly low last week. In general, though, out of the 4 drivers, it's probably the minimal one, given that we had such strong LNG deliveries as well, and LNG send out into the UK. So that helped pick up the shortfall from Norway. We just look at coal and oil in a greater detail here now. So as I mentioned, oil was a very volatile week. Last week, I believe we were at $111. We're now at $102, so it has dropped nearly $10 week to week, but it has seen some real volatility within that. Given the economic outlook, that is currently driving prices down slightly right now. But given the volatility, it's hard to really gauge where it will go from here. Looking at coal, it has had a strong week. It did kind of cap off its gains towards the very end of the week and perhaps is showing signs of hitting a cap there. Looking at the valuations, it is pretty much at its all-time peak it hit when the war broke out between Russia and Ukraine. So coal is looking quite overvalued, overstretched valuations in my opinion, looking at those figures. So I would not be surprised if we see that start to trend downwards. Particularly if we get any movement in the gas market, the coal market will follow and follow that downwards as well. And then finally, the carbon market. For a couple of weeks now, I've not had much to say in the carbon market. It has been trading sideways, but at the start of last week, we saw that shoot up in price, and you can kind of see that on the graph there, particularly the European EUA market gained about €7 within a day. And since has now trended down, so it's offset some of those gains slightly, but will be interesting to see where we go from here, if that is now going to become a more upward trending market again, as it always normally has been. So yeah, interesting to see that. That's it for a very quick snapshot of this week. If you do want any further information, there's always daily content uploaded into our Market Watcher website. And we do also have a team to chat to as well, which are available between 10 and 12, Monday to Friday. So thank you for watching and take care.